Hey traders, welcome to Charts and Coffee. Huge Snoopy mugs of coffee. Hope everyone is doing great. Happy Friday, everybody. We are going to take a look at what we have shaping up for the last trading day of this week, and what a couple of weeks this has been. The volatility that we've been seeing, and I wanted to show you all this because I'm up to my eyeballs right now in class slides and adding slides and looking at what we're dealing with right now, so that not only can everyone get the best of the top tier pro system for years, frankly, decades to come is always the goal. The consistency in tools is a big part of confidence. A lot of folks say, Rag, you're so calm during these times. Yeah, I've been looking at the same tools for so long. There's a huge amount of confidence I have in them. And that's exactly what top tier is doing. So let me show you all really quickly, because a lot of times what happens during difficult moments, seasons, they're usually short, but difficult seasons in trading tend to be, once we've identified them, they tend to be less the dark at the top of the stairs. They tend to be less the monster under the bed. So let's talk about what it is and say, okay, it's not that my approach, right? Out there somewhere, the pig in the head is saying, oh, my approach is broken. Oh, my system is broken. It may not be broken. You just might be lacking a few things that you had on your charts or known, it would have made it a lot easier. This has not been an easy week. So let me preface this by that. Let me show you why. Take a look at every candle we've had up until this point right here. So separate what we have now versus what we had back then. Back then, price action was trending. Back then, price action really obeyed the support and resistance of volatility, which is the 68% probability of where something's going to move. We did that for 3 full months. In fact, we've done it for almost 5 months. But this year, for 3 full months, that was the nature of the market, the price action that we were trading. Right in here, starting with this candle, and everyone probably remembers this candle. This is that Thursday. We had 3 FOMC members. All of them said who knows what. And then finally, the last FOMC member at 2 o'clock. Yeah, Meester, I'm talking about you. All of a sudden, we saw what happened in equities. And we really haven't recovered. But recovered from what? Is this a downtrend? Oh, gosh, no, right? I mean, look at this, gang. We are just really moving sideways. But it's the way in which we're moving sideways that matters. Take a peek. These are the first and second standard deviation of historical volatility. We typically move a certain amount, and we've exceeded the second deviation. That's super volatile. Take a look at the downside. This and this is the deviation to the downside. Look at where these candles went. Look at the totality of this candle, here to here, okay? And that's pretty much been what's enveloped most price actions since. You can see that there. All right, so we really haven't gone anywhere. Let's keep that in mind. It's not as if we're tanking, or that's the range we're pretty much stuck in. Does everyone see that? Okay, then what else do we have here that adds confidence? We're still looking at mostly bullish price and bullish participation. These are all green candles. The other thing that I want to note is that the most confused the markets have been this candle here with a neutral yellow and this candle here with a neutral yellow. That's where participation sort of contracted and there was a little bit more confusion. On those green candles, most of the participation was bullish. The price was bullish, the participation was bullish. Most of them, right? So once you step back and look at this, doesn't this kind of make sense? Yeah, Rog, we're not really going anywhere. We're not establishing significant new lows. We're not in a downtrend. We're not punching up to new highs. This has just been very choppy for 7 candles, which is almost 2 weeks, right? There's 10 weeks or 5 trading days a week. So this is a relatively new phenomenon. And yes, in this, it's going to be tough. No one's cheering for the most part about broad market follow through in an environment like this. Will we likely resume? Yes, it is more probable that we will resume. So what do you do now? Do you keep pushing in the same way you were before? you can. The pace doesn't have to slow down. We haven't slowed our pace down much in the Sector Secrets Mastery, but the way in which we're expecting price to move to certain levels. We have a brand new Freeport McMoran trade that we took. We have a brand new BITO trade that just hit the zone, hit the target, and that was it. It didn't follow through like usual. So we have to adjust to say, look, and by the way, still very, very fresh transition. This is still a very new type environment we're dealing with. So, the adjusting takes a moment. And in that adjusting of expectations, in that adjusting of saying, you know what, I can't be aggressive. I need to be a little bit more moderate to conservative on my triggers. It's going to be challenging. But here's a problem. Most traders don't know they need to adjust. They don't have a way to understand that in real time. And so they really suffer during this time. So last week, I want to be very frank, for 12 weeks, we had nothing but just, frankly, ridiculous amounts of account growth because of the structure of the market, which we recognized, accepted, and utilized as best we could, right? I've been mentioning in Charts and Coffee, this is an uptrend, right? For those 3 months, if not longer, please grow your account now, because eventually we'll deal with what we're dealing with right now in the broader markets. And we are. It's not fun. Last week was the first week this year that I didn't grow the account. And that's okay. It's going to happen, right? Last week was the first week this year. I said, gosh, I worked all week and nothing to show for it. However, I can also say it's not as if I blew up my account, gutted my account, did a bunch of dumb things that I've got to trade out of, just didn't follow through. This week, still tough, but I am going to eke out a little bit of account growth. Not as good as it was the first 12 weeks of the year, but I'm going to eke out a little bit of account growth. Trends that are working, like Freeport McMoran, sure do help. Little wins like BITO sure do help. And then the ongoing swings that we took from the end of March, Freeport McMoran and gold, are continuing to go because they have April 19 expiration. That's the beauty of swing trades, right? That's why we're doing what we're doing in terms of the class, which, by the way, is tomorrow at 1. So, this is right down to the wire, gang. In less than 24 hours, we are going to absolutely be deep diving, not just, Rog, how do we trade chop, but how do we trade downtrends? Rog, can top tier pro handle downtrends? Absolutely. I'm going to give you the sequence for that. What about narrow chop? Because the NASDAQ is not in a broad chop, is it? A BITO is. There's a big difference between trading something like the NAS right now and trading BITO. We have to know the difference. There's a different sequence. It's a different way we approach it. So we're going to get into all those 4 scenarios using the top tier pro tool. So I'm super excited, but I just don't want anyone here thinking, gosh, Rog, I thought I could do this. And now I'm realizing this is really tough. It's tough for everybody. It's tough for everybody. And I think it's really important for someone on this side of the mic and this side of the camera to say, yes, not all trading weeks and trading days and trading behaviors are equal. Some are far better, which is why we're continuing to focus on where the trends are. And we talk about those trends in this room during this show all the time. Metals, energy, crude oil. There are gold. There are definitely places that have trends. They're just not the places that we had trends before, right? So let me show you here. Where is there we go. We value your privacy. Oh, well, that's good. Okay. All right. So, when I take a look, what's happening now? Give me 1 sec here. All right. So when I go take a look at the sectors, right? When I go take a look at these sectors, what do I know? What do I see? Look who's atop the 1 month look back. GDX? Where did that come from? Right? What happened to the halcyon days of semiconductors making higher highs? Gone. Not that they can't recover. That's where semis are. This is what I mean by adjust. I'm going to be walking through this process in detail because the truth of the matter is, I don't care what's trending. I really don't. As long as I can identify it and trade it with liquidity, this is what I mean about adjusting. Look what's top of the list. Gold, oil and gas explorers, energy, metals, communications, basic materials, utilities, agribusiness, industrials. Interesting list, no? Very interesting list. So things have changed. Even my beloved financials have been a little bit less positive. And financials were a big part of what powered a lot of the account growth the first quarter. Am I forcing financials to do that now? No, I'd be silly to do that. The tank is dry, right? Juice has been squeezed. So we'll move on. So that's really where we're at, gang, in terms of, I wanted to at least break this down for about 10 minutes. We still have plenty of time left in the show. So if you have any questions, type them on in. I hope that was helpful. Did that make sense, gang? Did that make sense? This is what we do day in and day out in the mastery. So I hope that kind of gave everyone at least, hey, there's an uptrend somewhere. Money doesn't go under the mattress ever, right? Money has to flow somewhere. And so if we know that money's not going to go under the mattress, money's not going to just sit in a piggy bank, what is it going to do? It's going to seek out alpha. It's going to seek out return, but it's going to seek it out in a different way. Obviously when the all-time highs are coming fast and furious, then, we're looking at tech. We're looking at higher beta names. But when things get choppy, market participants of all sorts, including the non-human ones like algos and AI, they do the same thing. They look at normalized performance. They look at trends, but they're not looking at trends at just the price level. And that's where a lot of traders are getting hurt, or at least misguided, because most indicators are price-based indicators. Some sort of combination of open, high, low, close, some sort of combination of looking at those four numbers and then spitting out some sort of output, a line, a dot, whatever. The challenge is the machines, Skynet. I like to call it Skynet, right? Skynet's looking at a whole lot more. Skynet's looking at participation. Skynet's looking at volatility. Skynet's even looking at time of day. Skynet's looking at mean reversions, right? And all those things can be measured, but not with price alone. So if you're looking at your indicator thinking, Raghee, is this a price-based indicator? I would probably fathom to say 90% is yes, right? Because in fairness, even for me, that's worked for 3+ decades. We definitely see in a shift where AI and algos and retail traders, and the shift was pretty abrupt and it's not shifting back, right? Some changes, once the terrain changes, it's permanent. Earthquake happens and the Earth's crust rips apart, it doesn't close back up. That is the new terrain. And that is what we've had. We had an earthquake sort of in 2020. See, these new technologies really started to have much, much, much more influence. Do you think retail traders like us are going anywhere? Or are you hearing more of your friends saying, yeah, I want to learn about trading, right? That's one thing. Do we see algos going anywhere? No. In fact, we know there's just more kinds of them kicking into the market. By the way, algos are just math, right? Math plus computer equals Skynet, right? So those are things that, because this is happening, we have to adjust, gang. All right. So I see a couple questions coming through. And first one is, let's see, GLD. Yeah, we're going to stick with GLD. We have until April 19. We continue to tighten up our stops on that, just to keep that safety net underneath that unbelievable trend. Schlumberger is fine. 5 minute. I like Schlumberger a lot, but when I crack open XLE, the XLE, and actually, this will be something that's part of the tech session for the class that starts today at noon. So please, gang, if you are thinking about joining the class, do so sooner rather than later, because the install session is at noon. It's of course recorded, and even if you're there live, you're definitely going to watch the recording, going to want to catch it. But the install session starts today at noon. So let's take a look, because we're going to talk about how to set this up in that session. A lot of folks say, Rog, how do I do this? Lorna Bot's going to walk you through how to do this today, because this is a key part of what we do. Notice that Schlumberger is the only one that still does not have the green momentum and trend. Doesn't mean that we can't buy it. Look at the green candles. We're still above the mean reversion. We're still above the daily price movement range. But I'd probably focus a little bit more on Occidental, CVX, and Exxon. But Schlumberger would be on the list of what's important. It'd be number 4. That's the way that I would look at that. So great question. Yeah, 5 min. Yeah, great question. I like, and great place to look. We like energy. We want to focus on that strength. Look at the clarity there. This is what semis looked like back in February, in March. This is what semis looked like back then. And now we have energy doing it. Do we care what the Do we care what the sector is? No. We want to focus on the structure. If semis still look like this, we'd be talking about SMH and TSM. And well, actually, Qualcomm still looks pretty good. So those of you saying, Rog, I haven't given up on semis yet, keep an eye on Qualcomm. But this is what semis look like, but 60 days ago. This is what I mean about adapting, adjusting, and having tools that will show you things have changed. Let me show you. Actually, let me just show you. This is what semis look like. Now, look away a little bit. Looking at an eclipse. It's awful. Where's all that gorgeous green we had? Qualcomm's the only one still standing. It's won the game of survivor in the semiconductor sector. All right. So that is what we've got right there. Let's see here. Let's go back to our layout. Larry asks, inflation. Larry, I'm not gonna put that within the context of inflation going higher. But your question is on DBC. Okay. The only inflation that matters, gang, is the inflation that the Federal Reserve says is. And they are saying it's not going higher. So remember, there's the real world, which I acknowledge. Remember, monetary policy is based on their metrics, not our reality. So aside from that, is DBC something we could focus on to the long side? Yes, it would be something we could focus on to the long side. We've gotten above the 200, which is now we're in the bullish hemisphere. But as far as a trigger for entry, I'm not there. I'm not there. And one of the reasons I don't look at DBC all that much, Larry, is that when you take a look at the option chain, make sure the option that you want to buy has liquidity. The only options with any kind of reasonable liquidity, and it surprises me how often traders are willing to go into illiquid names. DBC April 19 is pretty illiquid. Now, let's say you're going out to May 17. The two strikes, there's only two strikes that have liquidity, the 23 and the 24. And I'm talking the call side because we want to be long. So the problem with DBC isn't necessarily the structure. Please be aware of having liquidity. Have a minimum amount of open interest that you need to have. Have a minimum amount of spread before you wander into that's my 2 cents before you wander into a call. All right, Verizon, not yet. Ren, not yet. Maybe, but not yet. Definitely keep an eye on it. Above the equator, trying to organize bullishly. Question from our Silver Essentials room. Cheng asks, AMD. I want nothing to do with AMD, my friends. But you mentioned the support line. Okay, so let's at least talk about that. Sure. So the support line would be this automatically drawn. There's two of them here. Darvis level. I agree with you. We have some gorgeous Darvis levels, right? But here's what I'm going to say. Of all the things that we can do in semiconductors, why AMD? We have to ask this question. Why this symbol? Why not Qualcomm? Why not Taiwan Semi? Why not NVIDIA? Right? Why a structure that is freshly down, printing nothing but red candles since mid-March, right? So this is where I say what you trade is more important than how you trade it. So AMD, despite that support level, which is actually a really good one, I would say is a no, because if AMD bounces, it's probably not out of the realm that Qualcomm's going to bounce, and Qualcomm's got an uptrend, right? And Qualcomm's bouncing very nicely out of those daily price movement ranges. Those are trades, right? Those are trades for those of you that want to trade Qualcomm. What about something like Taiwan Semi? At least it doesn't have red candles. That's going to be a better. So a lot of times I think that when we look at certain stocks, there's going to be a bias as to why we like it or why it's of interest. And I get it. I have that problem too. Disney, GE, JP Morgan, they added so much to my account. Part of my brain just wants to go right back there. But the other part of my brain says that's not necessarily what's happening now. So that's where I say, gang, you could put on the most perfectly executed idea, but top tier is saying don't do it. Find somewhere else to put that idea, because it's going to be time spent and dollars spent in a corner of the market that has a lower probability. I'm not saying an impossibility, but it has a lower probability of following through. Look at Qualcomm, look at Taiwan Semi, find things that are at least neutral, dominated by as much green grab as possible. And that would be Qualcomm. All right. Gang, and just like that, I'm out of time. So as always, thank you so much for being here for Charts and Coffee. We've been doing this show now for 3 years plus. So thank you so much for making it what it is. Thank you to those folks on my YouTube channel, my Twitter or X, and also the Simpler Trading YouTube channel. Thanks for being here 5 days a week, getting ready for the bell. I appreciate the time. Love the questions. I'll see you on Monday. All right. Well, actually, hopefully I'll see most of you tomorrow at 1 o'clock. Be good to each other.